All right, hello everyone, and welcome back to the show again. So let's get started. All right, so for S&P 500, over here, okay, we need to do three because there's a weekly closing. Okay, so let's look at the weekly chart. Okay, so the weekly chart in terms of the S&P 500 is clearly still in a very strong bullish market structure. It's making higher highs and higher lows. So in terms of the strength-wise, its price is still very much above 200 simple moving average. In fact, it's also above 50 simple moving average. So definitely strong bullish trend and bullish market structure. On the daily chart-wise, like what I mentioned, right now it's sort of in the okay. So now you got this high, a lower high has been established, and a lower low has been established. So officially, the market structure for S&P 500 is clearly in a bearish market structure. Here, in terms of the trend-wise, price is still above this 200 simple moving average. So yep, it's actually very normal, especially when you've got a very large and strong momentum moving upwards. So this is a sign of there's possibly going to be consolidation for the next short-term period of time, maybe for the next 1 week to 2 weeks, that could happen. So in that case, in terms of the strength of the trend-wise, you can see this, and these are not aligned in so that's normal. So like I mentioned, if you've already entered this trade in, yes, I will still stick to it. But bear in mind that it does show signs of further weaknesses in addition to this high and lower high, low and lower low. But even across this very small itself, you can see high, low, and lower low form. So as of right now, it does looks to be more on the bearish side in the near term. So in terms of the investments, why I'm still holding back, I would actually prefer to break even this high to enter even more. But otherwise, if you do want to enter in terms of the long run, that's perfectly fine as well, especially when price is above this 200 simple moving average. Okay, so now we are done with S&P 500. Let's move over to Nasdaq. All right, so for Nasdaq on the weekly chart, it's clearly in a very nice bullish momentum and strength. As you can see, after breaking above the previous high, you actually pull back a little bit, find support, and now continue to make even higher high at now 10,000 mark itself. So yeah, market structure-wise is definitely bullish. Market trend is also bullish. The trend is definitely strong on the weekly scale. Because 50, 150, and 200 is aligned very nicely. Okay, so on the daily chart, what you do see is still looking good, even though this is potentially a slightly lower low because you got 10,012 here, wherever here is 10,008. Not very much of a significant difference, especially considering that this is a index and not a particular stock itself. So it's not just about people buying this, but people buying the underlying equities behind it. Okay, so definitely market structure-wise is still making higher highs. This is the one where it's making lower low, but there isn't a lower high yet. So technically, for now, okay, so now if you want to consider this, and yeah, you have a lower low and you have a lower high and a lower low. So yeah, officially it will consider to be as a bearish market structure, but this is very, very minimum. But all right, so since it is, I will stick to be objective. So it's still in a bearish market structure, bullish, and so even though it's in the bearish market structure, because this did close a little bit below this, so therefore you did officially form a lower high. So that is something to take note of. But that is not to say that just because it's from that particular small little lower high, I will enter a short. What I would prefer is, for example, here, for it to break below here. Otherwise, similar to the S&P 500, after climbing for so long, I do expect some possible consolidation along here. Could be a triangle consolidation, a flat consolidation, or even a complex consolidation. Consolidation is very much likely the chance that it can happen, especially after such a strong push ahead. All right, so let's move over to the next one for gold. Right, okay, so gold seems to have continued to break upwards towards the outside. So if we already enter a short, I believe. Okay, but before I address that trade, let's look at this. This is a high, 1740. This is 1741. So now you get a high, a higher high, a low, a lower low. So it is in a neutral territory in terms of market structure. Trend is bullish, and it's strong. So get this 50, 150, and 200. Okay, so in terms of the daily, which is where you would have entered this trade, there was a high, was at 1741. Was a stop loss. So your stop loss should have been triggered. So it's not wrong because you were taking a more aggressive using this as a stop loss region. So it seems that this has actually built up over here and still breaking down nicely, actually rise up. So there's nothing wrong. But of course, if you have been a little bit more conservative, your stop loss should be a bit wider in taking this. So there's another alternative to treat it. But for me, I prefer to be more aggressive in my trades and take this as a potential setup. But even if you have taken this, then yeah, that will still be acceptable 1:1.6 to 1.2 kind of risk to reward setup, but not for me. Okay, so if I've been stopped out, then that's fine. I would consider to short it again if it was a clear break above and clear back down right again as well. So there potential forced breakout kind of setup. But as of now, it's still in the, let me see, this is called a low, a high, a low, low, this is a high, high. So now that this has closes above here, which is why it has officially trended to a bullish market structure on the daily chart. So yeah, so trend could it be continuing going upwards? Possible, especially if you consider something. You notice that this 20 exponential moving average and 50 has been starting to flatten out. So if the price does find support over here, it is highly potential that this thing could continue upwards. So some people, if you're going to be on the aggressive end, you can have there's two approaches to play for this. You can have a buy stop order. So if it breaks above this previous high, you put your buy stop order over here. You have a stop maybe over here. This will be your entry. It's not the best. Yeah, I wouldn't move that. I would prefer if it accumulates over here a few days so that I can have a tighter stop loss and do this as a potential trade. Otherwise, I would not consider this because if I were to put my stop loss over here, the risk to reward is not good at all. So there's something to take note of. Otherwise, like I mentioned, the alternative one would be to wait for potential false break setup and then enter upon here as well. So yeah, there's two ways to play this out. And the update for gold has been done. Let's move over to euro. Okay, so for euro wise, okay, this was drawn on the 4-hour chart. Yeah, let's look at the weekly chart. Okay, so on the weekly chart, like what I mentioned last week, you realize this is a potential double top formation, which is why I say for you, if you were to enter a long setup, you have to be very cautious about it because it could literally be going up here, very near here, and then break down as well. Well, of course, if you're trading on a 4-hour time frame, you will take the daily chart as the reference. And yeah, so the daily chart now has plunges and closes below this 20 exponential moving average, which is a sign of weakness. So this is not the time to just go in just because it touches there, but rather to say you should be waiting for confirmation in terms of support. But this is definitely not any form of support. And if you were drawing this trend line, which I mentioned, is you wanted a clean break above. And yeah, we actually had a clean, okay, it did have a clean break above, but for this I would not enter. Because even though it was a clean break above this trend line, it failed to actually close above this 20 exponential moving average, which was already showing signs of resistance over here just recently, and even over here very closely. So when it's showing resistance, and even though it broke this trend line, I wouldn't treat it as a valid break. I would, on the other hand, consider putting a buy stop order above it instead. So you were going to trade. yeah, if you're going to participate in the next trending up movement that is be set up to go to consider. Okay, let's remove the RSI, because RSI typically I only see to see whether is there oversold or overbought kind of condition. So yeah, as of right now, nothing much. So yeah, over there like this, but let's update this and this. Okay, so on the weekly chart, what you see over here is very simple. So even though I put this, it doesn't mean that once it reaches this price you enter, but you have to look for the condition to meet, and this is potentially the setup that I'm looking for. So that's to be very clear. Okay, so you look into this, this is still 1.08216. So so this is a lower low and this is a higher high. So because of that, you actually get a sort of like an expanding wedge kind of pattern. It's a little bit far-fetched. I wouldn't exactly say it's expanding wedge per se. In terms of this and this is normal. Market structure-wise, it's actually neutral because you have an expanding wedge. So it's unclear in terms of that strength. And in terms of weekly trend, it's still bearish. Price is above. Price is below this 200 simple moving average on the weekly chart. And over on the daily chart, what you see is a bearish market structure. You get this high, a lower high, a low, a lower low. So this is definitely going to be even a lower low because it really closes below it. So people who have actually went for a short base of this would be taking this as a lower high, this as a low, this as a low. They will wait for a break below here to enter. But the reason why I mentioned I didn't enter or consider entry at that is because we have this very upcoming support and horizontal support as well. So the risk to reward is not going to be there in this particular scenario. But if this and this wasn't here, then yeah, I would definitely look to go for a short. Okay, so daily wise over here, you get this, and this is still alive. From price is still above 200 simple moving average. So, all right, let's finally look at Bitcoin again. Okay, Bitcoin, we're going to be looking at the weekly chart because it still trades on the Saturday and Sunday. So, as of right now, weekly chart is yet to close. So, on the daily chart, like what I mentioned previously, you got a high, a higher high, a low, a lower low. So, that is technically a bullish market structure. So, that's it. However, because I do also take into consideration of Elliott wave theory, I do understand that this could be technically a retracement or corrective wave in a ABC kind of wave. So because of that, I also see this potentially. So I didn't look to enter long. Instead, what I did is I looked to enter long above to if it breaks above 9,600. And on the other hand, it breaks below this 9,380. So in which case, I already entered a short on this particular trade. I'm holding to it. So let's see how it goes. But yeah. As of right now, you can see this high is a higher high, this low, this is a lower low. So again, it's now in the neutral territory again. Strength of the trend wise is actually still strong. Bullish trend because price is above 200 simple moving average. So one important thing to note, right, is that as you can see over on the monthly, weekly, and daily, both are showing signs of neutral market structure, right? Which is why my risk to reward tend to be a little bit on the lower end, and I try to take profit earlier than usual because there isn't a very nice, clear trending market. So that in order to be profitable in such range-bound situation, you tend to have to take a little bit more trades, but a little bit with lower risk to reward setup. Okay, so in terms of the 4-hourly trend, so over here there is potential signs of strength because what you get here is a high, a lower high, a low, and a higher low. So because of that, it's actually also in a neutral. So this is you get a full up for neutral in all 4 key time frame that I see over here. Strength of the trend line is actually this, and this is actually normal, and it's actually bearish. So for me, I already entered a short and I will still stick to it until this particular high has been reached. So I wanted to close this. For it to close above, then you get a bullish market structure formation on the 4-hour chart. That is when I'll consider to close my trade. But that's it, because price is now clearly been rejected at this 200 simple moving average. There is a potential, and we do see a very nice trend line actually. Yeah, so this particular trend line. So until it breaks above this particular trend line, which happens to also be at the 50 simple moving average on the 4-hour chart, is where I'll consider to close my short setup to take maybe a little bit of loss, and that's about it. Okay, so yeah. So yeah, target, I'll just copy and paste because target remains the same at 9.1K, and also the 8.7 to 8.8K for the two target range. But if I do see that it hits here, the 9.1K region, and a strong bounce was exhibited, I will actually close my remainder position as well, because this could be a potential double bottom, a very nice double bottom over here. So, yep, there you have it. Okay, so if you look into these, people will call this sort of like a bullish falling wedge kind of pattern. But for me, a bullish falling wedge, in order for me to enter on the bullish side, is still to break above these downward trend lines, like I mentioned earlier, which happens to also be this 50 simple moving average. So only upon a clear break in the bullish market structure will I consider a switch in terms of my biasness. All right, so if not, that's it for the day, and I'll see you guys tomorrow for a quick update on Bitcoin. Otherwise, have a great day and a great weekend, everyone. Bye-bye.